I'm Alan Kinney, Editorial Director with REIT.com, and I'm at REITWorld 2014, NAREIT's annual convention for all things REIT, in Atlanta at the Marriott Marquis Hotel. Joining me is Steve Buller, Portfolio Manager with Fidelity Investments. Steve, interest rates are likely to rise both in the United States, possibly abroad. What does that mean for REITs both here at home and globally?
What that means for REITs here in the U.S. or listed global property securities around the world is to some extent, unfortunately, unknown. If you look at historical statistics, and we all have, you see that there's very little correlation with the return of REITs here in the U.S. or abroad and the performance of the REITs themselves. So what I can say they're using historical, I don't know. But at the same time, more recently, we unfortunately have seen a much higher correlation with the return of property stocks and movements of interest rates. So to a certain extent, the last 18 months, they have been much higher correlated. Although at the same time, I think people are set for higher interest rates going forward, that people know that can and will occur at some point. So there won't be this knee-jerk reaction like we saw last year in the May timeframe.
Okay, so Steve, give us a story to watch with U.S. REITs in the coming year.
Yeah, I would say, and I put it under a headline of corporate restructurings. That is, I think you'll see an increased amount of M&A activity, possibly more spin-outs of certain assets out of currently traded ones. Perhaps you also see more share buybacks. If someone persistently trades at a discount to their net asset value, I think you'll see them sell assets to buy back shares. I put that all in the label of corporate restructuring. That is something to do to hopefully increase the value of the real estate or the share prices themselves.
Now one for the global market.
I would say, and this I see increasingly, is what I call higher and better use of your current assets or land. That is, we see industrial properties outside of London or in Australia, and Sydney and Melbourne being converted to residential uses. This densification process, that is, there can be a higher and better use of your current land and or building into something else because the market has moved on to it's worth more as a hotel than as an office building. It's worth more as a residential for sale than as an apartment. And I think you're going to see this trend increasingly in the listed property world to unlock value.
All right, Steve, thank you so much for your time.
You're welcome.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.